What's up, guys, and welcome back. If you are new here, my name is John, and this is Talk Finance. And today we are talking about another purchase that Realty Income just made. I know, another one. But if you saw my last video on Realty Income, then you already know that they made an investment of up to $1 billion in a company called Plenty. They are in the vertical farming business. Well, Realty Income found another way to keep expanding, making another large purchase. They just announced their $1.5 billion sale leaseback of convenience store properties from EG Group. PR News reports that the Monthly Dividend Company today announced that it has signed a definitive agreement to acquire up to 415 single-tenant convenience store properties located in the US from EG Group, a leading independent convenience retailer based in the United Kingdom. The portfolio is expected to be acquired at an estimated cap rate of approximately 6.9% and have a 20-year weighted average initial lease term. The transaction is expected to close in the second quarter of 2023, subject to customary closing conditions, approvals, and completion of due diligence. I know there's a few different opinions when it comes to Realty Income's expansion. Some investors are very happy that they are expanding as fast as they are, even in this market where some companies are slowing down their growth due to the cost of borrowing money. Other investors are worried that Realty Income is expanding just for the sake of expanding and are starting to get into a riskier purchases just to be able to keep up with their growing dividends in the future. Is this a good purchase for Realty Income? I mean, they did just buy a lot of property from EG Group with tenants and a 20-year lease agreement already in place. The tenants occupying this space are well-known retailers such as Tom Thumb, Fast Track, and Sprint. Approximately 80% of the total portfolio annualized contractual rent is expected to be generated from properties in the Northeast US, including approximately 116 properties in Massachusetts, 87 properties in New York, and 74 in Florida, which are the top 3 representative states in the portfolio. Over 80% of the total portfolio annualized contractual rent is expected to be generated from properties operated under the Cumberland Farms brand. I did some research on Cumberland Farms, and there isn't much information on their website, but found some information on this site about them. It says that Cumberland Farms makes life easier for busy people every day. Its network of convenience stores across 11 states reflects the values of 3 generations of providing customers with value, convenience, and unparalleled service. Whether you're buying a cold chill zone drink, a hot or iced cup of farmhouse blend coffee, or filling the gas tank, family owned for over 70 years, Cumberland Farms also has a long heritage of giving back to communities where it operates. And you can actually find those partnerships on their website, which include DAV, which is the Disabled American Veteran Charity, American Cancer Society, Red Cross, and United Way. This purchase is substantial since it's $1.5 billion. And it's a purchase of a lot of properties, all purchased at the same time in comparison to the purchase they made 2 weeks ago with Plenty, since they will be investing $1 billion into the vertical farming industry over time as the company grows, not all at once. This can be great news for Realty Income, being able to grow in a market where most companies are cutting. Also, they are making sure they continue being able to not only pay their dividend, but grow them as well in the future. I do believe this company has continued their due diligence, and as much as most investments have their inherent risk, I don't see Realty Income purchasing this large retail portfolio as very risky. They are starting to get into the investments that are riskier, that is true, such as vertical farming, but those could pay off for them heavily in the future, providing them a source of revenue from an industry they could corner. I will say I am surprised Innovative Industrial Properties didn't try to diversify into the vertical farming industry, since that is what they do with their current industry of cannabis. But as many investors have wondered before, can they continue raising their dividends as much as they have in previous years? And maybe this will give us an answer, as they heavily invested a total of $2.5 billion in 2 weeks. That's right, they beat their fourth quarter 2022 expectations, and after that release, they invested $2.5 billion more in 2 separate industries in separate locations across the US. With a market cap of $42 billion and seeing that this purchase will most likely close in second quarter of 2023, we can expect this company's market cap and value to grow by 2024 faster than we thought. Whether or not you should buy this stock now or at this share price is up to you and your outlook of this company. Do you think this company will continue to grow, and is it priced fairly? Realty Income pays a good dividend, but it really depends on whether or not you want to hold this company for a long time or if it's just a place to park your cash. Overall, since its inception, this company has made some great returns for shareholders, but the past 52 weeks, the lows have been at $54.43 and highs at $75.40 a share. I myself hold shares of Realty Income, and although I haven't bought any recently, since most of my purchases have been in the $55 range, I do plan on buying a few more at the right price for me. What are your thoughts on Realty Income's rapid growth? Do you think they're growing too fast, or are you excited at this big company getting even bigger? Leave me some comments below. Let me know what your thoughts are. If you found this content informative, consider subscribing and hitting that like button for me. It helps out the channel, and I would really appreciate it as well. See you on the next one.